Welcome to Forex TV's PM Exchange. It's Thursday, November 15th. I'm Remy Hoki. Today I'm joined by Ashraf Laidi, Chief Forex Analyst at CMC Markets. Ashraf will weigh in on continued sterling weakness and the US dollar climbing against the high-yielding currencies. So good afternoon, Ashraf.
Good afternoon, Remy. How are you?
Great to have you on the show today.
Thanks, man.
Well, we're here at the end of today's New York session, and U.S. stocks continue to show weakness, and as a result, we're seeing treasuries rally. But if you could weigh in on U.S. dollar strength against the high-yielding currencies, including sterling, Aussie, and CAD.
Yeah. Now the unwinding of the carry trade is being felt very much against currencies such as the sterling, because it's not just the flight away from the high yielders, but there's a very good reason why money is coming out of the sterling, because it's because of the fundamentals are getting weaker and weaker. The sterling, we have to remember that it was doing already very bad against every currency except the US dollar. Basically, the was really the icing on the cake was even though we had some high inflation numbers in the CPI on Tuesday. On Wednesday. It was Tuesday.
Mm-hmm.
On Wednesday, the Bank of England issued its report, and not only said that within the 2-year period, that the inflation is going to go within target, but they said that that's based on expectations of a rate cut in Q1. So again, this is the currency that you really want to sell against the U.S. dollar in times of stock market losses. And I know you have to be careful about buying the dollar outright, but really this is the kind of currency. So, we lost over 6 cents now, I would say almost 6 cents over the past week, and we are testing a very big support at 2.04. I would believe 2.0450, and I like, if you see the stock market falling, you can either sell dollar yen, or you can really sell sterling. You said the other high-yielding currencies. To a lesser extent, the Kiwi, and to a lesser extent, the Kiwi against the dollar.
Well, while we're on the topic of the sterling and rate differentials, Euro sterling hit 71.66 today. What is your forecast for the Euro sterling cross?
Yeah, it's I would say that there's a very good chance that we really could go towards 71.90. I don't know if we're going to break 72, because the Europeans, they do a lot of trade with the UK. They have their currency already very high against the US, and to have it so high at a 4-year high against the UK, they could be struggling. So I wouldn't really push it all the way up towards 72 just yet.
Okay, and while we're on the topic of euro, the dollar has been strengthening slightly against the euro after climbing to near record highs in the previous few sessions. But what are your expectations for the euro against the U.S. currency?
In the next session?
Yes.
Look, we have the industrial production tomorrow in the U.S., and it's expected to be, again, 0.1%, like the previous number. There's a TIX number with the TIX survey, which is at 9 a.m. We had such a horrible number in August. Would we see? It's rare where we can see two negative numbers. That was the first negative number in 1988. If we do see further, weakness, that could definitely really push up the euro back towards 46.80, 46.70, 46.80, 47.20 is big resistance there. And I would say that if industrial production, comes in with at least 0.1, 0.2%. Then I think we could see probably, the resistance coming lower around 46.50, and we could be really testing 146 again.
Well, in today's session, another thing worth mentioning is that the U.S. dollar index has rebounded from recent record lows. So that brings me to the topic of another currency pair, the U.S. dollar against CAD, which has been recovering from recent records. And what is your forecast for the U.S. currency against the Canadian dollar?
Remy, look, if for someone like me who expects further losses in the stock market, and really it's a lot of indications for the S&P 500, the charts don't look good, and with the Canadian, basically when the stock market is really falling, the Canadian dollar drops, and when the Canadians now, every single one of them is really trying to talk down the currency, or not talk down, but trying to really complaining, these two ingredients, and with the U.S. economic data actually not bad at all, we saw today's figures. And I think that there's a very good chance that probably the dollar Canada, could be testing 98.50. I don't know if we're going to go above that really. Maybe 98.50, 98.70. But a lot of people like to see something, going up, and they say, let's buy it, or, let's sell it, and let's sell dollar Canada on the highs. Is it wise to do so right now? No. If you want to buy the Canadian dollar, maybe it's wiser to buy it against the sterling.
Okay, and now that we've covered the commodity currencies against the U.S. dollar, let's move on to the commodity currencies against the low-yielding Japanese yen. What pairs will you be watching for out of the Aussie, Kiwi, and the CAD against the yen?
Well, look, we are talking right now when the stock market is falling 100 points. If Asia opens again in a very ugly manner, like it has been doing, like especially the Nikkei, then I think that maybe we could see some renewed pressure, definitely in the Aussie, in the Canadian, in the New Zealand dollar against the yen. Which ones I would be let's say, I would be selling with more conviction? I would say the Canadian dollar against the yen. I would say, and the New Zealand dollar. The Aussie, I'm not ready to want to really sell the Aussie against the yen. So I think there are some chances. We're seeing the New Zealand dollar, as we're talking right now, is weakening against the U.S. dollar. It was around 76. It was around 70. I would say 76. 75.70, 75.80. It is now at 75.30 when I just entered the office here. There is a big support around 75.20. So I think that currency, if it's doing badly against the dollar, it should do quite badly against the yen. And the yen has been strengthening because it has dragged the U.S. dollar from as high as 111.50, and then it broke to all the way below 111, and now it is testing around 110.30.
Okay, and last but not least, before we wrap it up with more concerns about the possibility of additional write-downs from the financial institutions, risk aversion will always still play a factor. But for the Forex traders in our viewing audience, where do you see the most opportunities, and what would you say to them in terms of risk management?
Keep your eyes on the stock market. Keep your eyes on the data. When before the U.S. Opening bell opens, you got to look at the futures market, and you look at how the Nasdaq, evolves, how the S&P futures evolve before the opening bell. You have to keep your ears open also to what's happening, to if there is any excuses for the stock market to drop. When you look at the chart, it looks very bad, but the fundamentals, the people who believe in the fundamentals, they say, well, we need news. Today, like we said, we've been telling clients all over that November 15th is going to be a very bad day because it's partially because of the last day of the 45-day notice period that clients have to give hedge funds. We've seen that on August 15th. We've been telling clients for the past 2 days that November 15th is going to be very bad, and it is getting bad. What's made things less bad was the delay of the FASB 157 rule. For those of you who want more details, you can look it up, but because we're talking about foreign exchange and Remy is running out of time here, so let's get straight back to the point. So you have to watch out. So for instance, today, as CNBC was saying, the reason that the stock market is falling was because Wachovia said this is the worst situation since the Depression. This is called a catalyst. This is called a fundamental excuse. But the stock market has made up its mind to sell at lunchtime. So I think one of the best ways really to do is to let dollar yen go up, near the session highs, and then to sell it. A New Zealand dollar against the US dollar is still a good sell. And if you have enough money, enough margin, sterling dollar, is definitely still a good sell. And I would not sell the euro dollar just because it is high. I would not sell. This, if you want to be a little bit more aggressive, sterling Swiss has still a lot more to go downward. And euro sterling, don't buy it at 71.60. If it retreats around 71.40, 71.30, then it's a good buy. But these are really the currencies that I would really look at, and these are the things that I'm doing right now. If you guys can trade New Zealand sterling, and this is something actually that we offer at CMC Markets, and the reason that I like to offer that, Remy, is that because it gives you more bang for your buck. And New Zealand sterling is a very, very low margin, Kiwi sterling. If you actually not stealing Kiwi, but Kiwi sterling,
okay.
Because it's cheaper, and you could hedge that, and you could go long in that.
Okay, Ashraf, as always, thank you very much for insight and analysis.
Thank you. It's a pleasure.
This has been your Forex News with Ashraf Laidi from CMC Markets. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended the session down as investors weighed concerns about consumer spending and the overall U.S. economy. The market remains jittery about any additional credit losses at the big financial services companies. In U.S. economic data, the Labor Department reported that its CPI rose 0.3% in October on higher energy and food costs. Meanwhile, the Labor Department also reported that the number of laid-off workers filing claims for unemployment benefits rose by 20,000 to 339,000 in the latest week. And the Philadelphia Federal Reserve said regional manufacturing activity expanded in November. The Philly Fed Index, the business index, rose to 8.2 from 6.8 in October. At the end of today's session, the Dow Industrials fell nearly 121 points to close at 13,110.05. The tech-heavy NASDAQ lost 25.81 points, or 1%, to close at 2,618.51, and the S&P 500 fell 19.43 points, or 1.3%, to close at 1,451.15. In the fixed income market, U.S. Treasury prices rallied as investors moved to safe haven government bonds. As stocks declined and more disclosures of credit market woes hit the market, the benchmark 10-year Treasury note rose with the yield down 2.6% at 4.159%. The 2-year note gained with the yield falling to 3.354%, and the 30-year bond also rose with its yield down to 4.539%. And in energy, NYMEX crude oil futures fell following the latest EIA report, which showed a rise in U.S. crude inventories. Also, OPEC reduced its growth forecast for global oil demand. Earlier today, the EIA reported that crude oil inventories rose by 2.8 million barrels in the latest week. The benchmark crude contract fell $2.09 a barrel to an intraday low of $92 following the report. By the end of the session, crude oil futures had fallen, closing down 66 cents at $93.43 a barrel. The EIA also reported earlier today that U.S. refineries operated at 87.7% of capacity last week. December RBOB gasoline fell 3.42 cents to close at $2.3362 a gallon. December heating oil fell 1.47 cents to close at $2.5587 a gallon. And we also had natural gas inventory data come out, and the EIA said nat gas fell 9 billion cubic feet to 3.536 billion cubic feet in the week ended November 9th. At the end of the session, December nat gas futures fell 13.5 cents to close at $7.70 per million BTU. Over in the metals complex, gold futures fell $27, a sharp reversal from the prior session gains. This came as the U.S. dollar rose amongst credit-related troubles. December gold ended down by $27.40, or 3.4%, closing at $787.30 an ounce. It hit an intraday low of $784 an ounce. Other metals also closed down, with December copper tumbling 21.55 cents, or 6.5%, ending the session at $3.08 a pound. December silver also fell, falling by 3.9%, or 58.3 cents, closing at $14.482 an ounce. This afternoon, we're joined by Bobby Firestone, analyst at Aileron Trading. He'll recap today's session in energy and metals futures, and he'll also give us his short-term commodities outlook.
Well, today we saw the crude bulls basically get stabbed in between the shoulders. This morning, the inventory report came out, a day late because of the holiday, and the estimates I was looking at were roughly 3.5 million barrels off. The estimates were looking right around a draw of about 700,000 barrels on crude. We came in with a build of 2.8 million barrels. Now, logically, this makes sense. When we think about the entire inventory supply line for crude, where it comes out of the ground to get to the refineries, well, the refiners have been pushing off attempting to not buy because the price has been so high. Well, they can only last so long, so they're going to have to buy, and overall it's going to make the inventory numbers skew, or in this case, unskew, back into the favor of a build. So I think we're going to continue to see a series of steady builds in the inventory numbers as we see the model return back to a more normal state. Now, we combine that with the global energy forecast that came out earlier this week. $100 crude not looking like quite as much of a sure thing. Now, we had record numbers of $100 a barrel crude strike price crude options expire worthless. earlier this week. Now, overall, I'm going to say at this point, with what we're currently seeing and what I see on the horizon as potentially pushing this higher, really, even though we're at 93.33 on the December contract as we speak, chances are, on a front month basis, we're probably going to see 60 before we see 100. Realistically, the dollar slide, while it has, and it's definitely slowed down, I don't think there's too much more downside there, which is going to prevent the inflation question play continue to push it higher. We're seeing a trickle down effect. We're seeing just buyers are not coming into the natural resources. Gold and silver have gotten slammed as well. Gold, we're back down. We're below 800. Today we're down over $26. We're in 787.5 as I speak right now. Now, long term, I think a gold buyer would be wise to at least look at acquiring some here. We could see another rally coming up. And so overall, I'm liking the downside on crude. I'm liking the long side on gold for a longer term play.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.